May 12th. May 12th.
Yes.
The day that the consumer price index was red hot. If we put up any chart of the Cathie Wood stocks, any one of them, Zoom, you could put up DocuSign. Not sure what.
How about Tesla?
Tesla. They all bottomed May 12th, May 13th. I wish we could just put up every single chart of every high growth.
Welcome back, friends, for one more update from the world of EV stocks. In case you're new to this channel, please do consider subscribing. And if you live in the United States, you can get 2 free shares worth up to $1,850 just by following the link in the description. Now enjoy the rest of the video.
If you remember, the CPI data that came out on 12th May took a lot of heavyweights by surprise, and it was the first indication that the US economy was indeed heating up, and that could lead to an end to the accommodative monetary policy from the Federal Reserve. Well, as a result, turns out 12th and 13th of May were indeed a pivotal moment for all growth stocks including NIO, and money finally started rotating from value stocks into growth stocks from around that time. As we see on the technical chart of NIO made a bottom on 13th of May, and since then it has now rallied by close to 50%. Almost this exact same pattern can be seen for most of Cathie Wood stocks too. From Roku to Tesla, the charts made an exact same recovery, and it was all very much along the expected lines that experts had predicted.
Jim, the question then, you put up a chart of some of these epicenter names like Darden, right?
Yes.
Which are in a medium-term downtrend.
Absolutely.
And if Mike Wilson were here, for example, he would argue when you're at peak growth and you start to see deceleration in growth, cyclicals don't do well.
May 12th. May 12th.
Yes.
The day that the consumer price index was red hot. If we put up any chart of the Cathie Wood stocks, any one of them, Zoom, you could put up DocuSign. Not sure what.
How about Tesla?
Tesla. They all bottomed May 12th, May 13th. I wish we could just put up every single chart of every high growth. That was when the CPI went up and the sea change started and the rotation began, where the cycles started going down and all of these other stocks started going up.
You can see it right there.
Yes,
right.
and you can go back and look at. What's incredible is it's every one of those stocks came back. They roared back, and they roared back because people realized, you know what? It's over. It's over for the cyclicals, and it was. You can hit up every one of them. I mean, I found it pretty daunting to realize that every single stock in the rotation was the same exact chart. I mean, I'll give you some that are the same exact charts. It was the Mangold Fire is what I compared it to. You've got...
We're looking at Zoom right now.
Right.
And when you look at ARK, you're right. I mean, ARK is basically flat on the year.
They're all
now.
the same.
ARK, yeah.
They're all the same. Every single one, CrowdStrike, every one of the cybersecurity stocks.
And you can say the same thing about a lot of travel names on, say, June 2nd. Right?
Yes, that's another absolutely. These things have all happened right in front of people's eyes, and we forgot that what you had to look at was not opening economy, closing economy. It was colonial. People thought that CrowdStrike bottom a Colonial Pipe. No, it was just the price to sales stocks. Snowflake. Any stock that's price to sales bottomed May 12th. When the consumer price index was red hot, and people realized that Powell was going to have to slam on the brakes, whether Powell said it or not. And look at this. These are all the same chart.
Right.
They are all price to sales, and they bottom. And I don't need to ask you what you think of it, because I just told you what to think of it.
Yes, you did.
So the market didn't need to hear a Fed presser. They got it.
Right. And what's amazing is people at home think a bell goes off. They think, well, you know what? We're going to hear Jay Powell, and he's going to... No. The CPI was the absolute bell that went off. And people said, you know what? This is not sustainable. We are going to see a decline in the cyclicals and an increase in the Cathie Wood stocks, the price of sales, and it's across the board. Every stock bottom, every one of those stock between May 12th and May 13th.
An end, or is that are we in a
You have to see inflation come down.
Rotation again.
You have to see inflation come down. Remember, the key part of inflation, 1/3 of that inflation was used cars. Now, used cars have plateaued. There was a downgrade of Carvana. And what I'm saying is that if you want to see when you'll get a sea change, I mean, right now everybody's finally saying, you know what? The high growth stocks are where to be. Well, the high growth stocks have been here since May 12th. And some of those stocks are up 50%. I'm saying you're late in the high growth stage if we see a peak in used cars, which was the biggest growth. But there's still a lot of people who feel steel's going up. I mean, there's a note today, General Mills talking about all the costs going up. We don't have freight costs are the remaining costs, and we can't get those down right now.
That's part of the Piper note on Dollar Tree.
It was very important.
Freight costs are unlikely to be passed along. Although Kraft North America was on closing bell yesterday and said they're managing to deal with it. Inflation, that is.
I find that when General Mills note says, look at the across-the-board inflation, I am concerned. But I think that if we see used cars break, we saw lumber break, and next week we get the acreage, June 30th. If June 30th acreage shows that more corn's been planted, inflation peaked.
Of course, Cathie Wood herself was also asked several times about the crash in growth stocks earlier this year, and she correctly predicted that the crash was only a great opportunity.
Touch, if we may, on this sort of current pullback, do you actually welcome that as a long-term buying opportunity for a lot of the stocks you love, or are you feeling the heat a little bit?
Oh, I love this setup. The last time I was on, I think I said that this rotation was good news because it meant the bull market was broadening out. It was strengthening. And the worst thing that could have happened to us is to have the market narrowly focus on just our ilk of stock, the innovation space. Instead, it has broadened out so that year to date, I think it's energy's up 40%, financials are up 27%. And from the peak in mid-February, our strategies are down. The ones that have been hit the hardest, not all of them, are down 30 to 35%. I love that setup. We're at, from our point of view, 5-year time horizon, nothing has changed except the price, and therefore the return, which at the peak of the market and of our strategy in mid-February, we expected a compound annual rate of return of 15% on average per year from our strategies. Now that the prices are down, that number is somewhere in the 25 to 30% range.
We do believe that the growth stocks like NIO are where most investors will make big money this year, and the secret to success here is simply holding on for multiple years and adding on dips. NIO is currently trading around the $46 mark today, and we believe it can soon cross the $50 mark, which will open up floodgates for NIO to make a new all-time high.